You guys know that I love cash flow. In fact, I say it on just about every video. And as a result, I love dividend stocks, dividend ETFs, and selling covered calls. But for the new dividend investor out there, it can be difficult to decide what types of dividend stocks are a good fit for your portfolio. And part of that is defining, well, what is a quality dividend stock? What are the metrics I should be looking at before I add a stock to my portfolio? In this video, I'm going to break down for you exactly the metrics you should be concerned about when it comes to the dividend stocks you add to your portfolio. We'll look at dividend yield, dividend growth rates, revenue, payout ratios, and more. And we will definitely be utilizing my dividend stock spreadsheet, which is a great tool to utilize, and I'll share with you how you can use it in the future as well. What's up, you guys? Welcome back to the Average Joe Investor channel. And my name is actually Joe, by the way. So there are a lot of dividend stocks out there. My dividend stock spreadsheet pictured here tracks all of the dividend stocks that have been paying increasing dividends for at least 5 consecutive years. And if you track all of these dividend stocks going on all the way to the bottom, you'll see that there are 721 different dividend stocks. So how do you narrow that down? Because nobody ever in the history of ever wants to buy 732 dividend stocks. As a result, we're going to work through some of those metrics that you need to be concerned with so that you can A, buy the stocks you want to buy, but also B, feel confident that you made the right decision. So just a real quick breakdown here. We've got the dividend stock ticker symbol, their company, the sector, the economy they're in. There's also a column hidden here, which is the sub-industry of the sector. For full awareness, you can look at that if you have the spreadsheet. The tax treatment, is it a qualified dividend, a non-qualified dividend, or K1 deferred, which is a master limited partnership almost always. If there's an upcoming dividend in the next 30 days that's already been announced, it's going to be listed here. Their current dividend streak, meaning the number of years consecutively they have paid and raised their dividend. Then their dividend classification here. Just as a quick FYI, dividend challengers have been paying dividends. Let me just show you here. You can click, if you're in the spreadsheet, you can kind of hover over this red thing here. Challengers are 5 to 9 consecutive years. Contenders are 10 to 24 consecutive years. Champions are 25 plus years. Aristocrats are also champions, but they also are members of the S&P 500. That's also 25 consecutive years. And if you see King on there, as you see it right here, that means 50 plus years of consecutive dividend increases. We have the current price as of October 12th, the 52-week low and the 52-week high, their revenue growth over the past 1, 3, and 5 years, their dividend growth rates over the past 1, 3, 5, and 10 years, if applicable. Then we have the dividend yield, their average 5-year dividend yield, and based on this difference between these two numbers, if it's on discount right now or if it's paying a premium based on the yield, their option frequency. Do they pay monthly options? Do they not pay options at all? Or do they pay weekly? Their market capitalization rate, their annual dividend, and the frequency that dividend is paid. Then their payout ratio based on free cash flow for the trailing 12 months and the past year. And then we have historical free cash flow numbers just to give you an idea of whether or not that free cash flow is consistent or if it varies significantly year to year. The first thing you need to consider is, well, am I going to be selling options or covered calls on this portfolio or not? That makes a big difference because if you choose not to, the amount of dividend stocks that will become available to you is pretty significant. You generally don't want to pick dividend stocks out of a monthly dividend frequency because there's generally not enough volumes. We're just going to keep that out of the conversation for this video. Now, when we think about picking quality dividend stocks for our portfolio, something that immediately comes to mind is, well, how long have they been paying increasing dividends? And that's a big consideration for me. So for me, I'm thinking if I'm going to look at quality dividend stocks, I'm going to exclude challengers, meaning they've only been paying dividends consecutively and increasingly for 5 to 9 years. So we'll come in here, we'll filter out the challengers right here. Now, the next thing I think we want to think of, especially within the context of the 2023 we've had and the potential for a future recession, is what do their revenue growth rates look like? Are they consistently increasing their revenue year over year? We want to avoid stocks, to be completely honest, we want to avoid stocks here that are consistently tanking on their revenue, especially if it's getting increasingly worse. Right here, 2, 3, now 19%. So my thought process here is you don't have to immediately go to green, which is filtering 10% or higher, because if you just filter by green, that's going to eliminate quite a few stocks. So what we're going to do is we're going to adjust this down to 5% or higher every single year for the past 1, 3, and 5 years. Now, next thing we need to look at here is dividend growth rate. We want to see a dividend stock that's increasing their dividend, but we want it to be a meaningful increase though. So not 0.5% every single year. That's nothing. That's not keeping up with inflation. In a perfect world, we would have a dividend growth rate exceeding the long-term inflation rate And in an extremely perfect world, if that's a thing, you'd want it to exceed the short-term inflation rate too that we're experiencing, 5, 6% right now. We're going to capture all dividend stocks with a dividend growth rate exceeding 2% for the past 1, 3, 5 years. Now, right now, we have no filter on our dividend yield. And ultimately, if I were picking dividend stocks, I would keep it this way because I'm okay to increase my dividend yield with option premium. However, not everyone's going to do that, and that's not a consideration in this video. So we're going to cap this here. We want to make sure that we have a meaningful yield. We're going to say it's got to be at least 2%. This is going to eliminate dividend stocks here. But then again, some of these dividend stocks down here do not have meaningful yields, 0.1, 0.2, 0.3%, but it is going to get rid of some quality companies such as MasterCard, Intuit right here, Costco Wholesale, and Microsoft Corporation at 0.8%. But then again, 0.8% is not a meaningful yield unless you are pairing these stocks with covered call premiums, in which case you can pop this up quite a bit and still own quality dividend stocks. But since we're assuming we're not selling covered calls, we're going to filter this down and we're going to exclude anything under 2%. Last thing I want to look at here is the payout ratio. Now, most people, when they think of the payout ratio, they look at a standard calculation, which is an annual dividend divided by the net income for the company. And there's nothing really wrong with this calculation, but I think there's a better one because net income can be manipulated by CEOs and executives to kind of achieve a certain goal that they need to show. Dividends are not paid with net income. Dividends are paid with cash. So I think that a much better calculation is to look at the dividend payout ratio, not based on net income, but based on free cash flow. And that's what I measure here in this spreadsheet. Payout ratio based on free cash flow for the trailing 12 months and for the previous calendar year. These numbers should generally align with each other, though that's not always the case. And sometimes if this number here, the trailing 12 months, is much higher than this one here, then that could be a sign that the company is entering into some trouble. We want to make sure that it's not negative, because that's a problem if you have negative free cash flow, but we also don't want to be above a certain number either, which we're going to call 85%. So we're going to do a filter here, not by color, but by between 0% and 85.01%. So we've got 80 dividend stocks, and some of these may still not be a good fit for you. For example, if you're going to do this in a retirement account, generally you don't want to use a K1 deferred type of tax treatment, so it might filter out some of these energy companies that are master limited partnerships. So we'll go ahead and get rid of that for the purposes of this video. So we've got qualified, non-qualified, and again, I would recommend non-qualified dividend stocks are best owned in a retirement account because you're not getting a tax benefit. If you have to own them in a brokerage account, then I would own qualified dividend stocks. As we scroll over here, we'll see that the top yield that's available is right around 7.7%, which is with Fifth Third, I believe? First Interstate Bank System, FIBK. Some of these are going to be pretty small companies, but they still have a history of paying and increasing their dividend, which is why they're on the list. They're not talked about in the media quite a bit, but they're still solid companies based on the metrics we've filtered by. You can also see that it's on quite a discount right here, because its historical dividend yield is 4.6%. So based on this criteria, you could just sort by sector and then figure out, okay, I want to own 1 or 2 companies from each of these different sectors. And you're going to find that some sectors may not be represented at all. We've only got one from communications, which is Nexstar Media Group, though they have been paying dividends now for 11 consecutive years. We've got a few options in consumer discretionary. We've also got a few options in consumer staples, 2 in energy, quite a bit in financials, which is pretty common. We've got a healthcare stock right here that we can use, industrials, information technology, materials, real estate, and utilities. We have pretty much an option from each one of these sectors of the economy. Now, you may find that based on the metrics we filtered by that you're just not quite getting the stocks you want to get, and that's okay. That just means you need to tweak some of the filters, which, by the way, I should lead into how can you utilize this dividend stock spreadsheet and every future dividend stock spreadsheet that I create? Well, you can join the Patreon community. As a member of the Patreon community, you get access to a ton of content. Number one, you get access to this and every month's dividend stock spreadsheet updated based on current prices and current companies that meet the criteria. That's at the $5 per month tier. If you want to get even more content, you can join the $15 per month tier, which gets you access to the spreadsheet, but all of my spreadsheets that I have, as well as my portfolio, what I'm buying, what the different options that I'm writing in my portfolio, all of the trades that I do, and access to the Discord community, which is a huge value. I can't even quantify it. but if I could, it'd be $15 a month. If you want to learn more about joining the Patreon community, check out the link down in the description below. The reality is every investor is going to have a little bit different criteria based on their risk tolerance, what they're trying to accomplish, the types of companies they want to own, and the type of account they're trying to invest in. What's important is that you, number one, can outline what you're investing in and why, and you feel confident in the companies that you've filtered by. Hopefully you found some value in this video. Make sure to leave your 2 cents down in the comments below. It's my goal to respond to all comments left on the day I post a new video. That's all I got for you guys in this video. Have a great rest of your day, and thanks for watching.